Okay, and it's time. News kicking in, so let's switch to the chart instead of my face on screen. How are you doing, everyone? Welcome, good to see you here. It is 2:30 p.m. Central European Time. And at this particular time, we have over here the news of Friday, October 4th, non-farm payrolls and unemployment rate. Now, I don't know what it is, but it is here in my 3-star impact trading economics sheet here. So must be important. So let's see if anything happens on the chart with regards to the volatility. Of course, make sure you trade safe around these hours because of the volatility. All right, so I hope you have a good Friday so far. For many viewers, maybe the final day before the weekend. And for some viewers, you work during the weekend. I'm usually one of them. I don't always make a lot of content during the weekend, but I work on, background stuff. So, yeah, welcome everyone. Good to have you here. Hopefully you have a great weekend as well. If you have any interesting plans, share them with me. Tomorrow I do a Spartan race with Ashley. So we're going to do a Spartan race in, it's close to Cannes. And exciting. I look forward to it. So it's an obstacle run. For the ones that don't know, it's like you run a distance and then you have all the obstacles in between. So it should be a good time. Alimo, welcome. Trading Queen, good to have you here. Good to have you here. Hopefully Gustav is okay. Sam, welcome. Kaveen, Ace Winner, what's up? Welcome, good to have you here. Someone piano. Talking about piano, I actually want to learn to play the piano. That is one of the goals I have for the long term is to be able to play piano. I've never played any instrument, to be honest, but I really enjoy sometimes also just listening to piano. I gotta learn it. Want to learn it. Siu, welcome. Eva, good to have you here as well. Good to have you here. Ravinder, Cheese, Docs, good to have you here. Cheese, Andrei. I saw a video today where they race a turtle against a rabbit and the turtle actually does win. Slow and steady wins the race. I saw the same video. Yeah, I saw the same video. They put the turtle and the rabbit, it was what was it? Maybe like 4 meters, right? And then in between like these boxes. And they had a box between the rabbit and the turtle as well. They couldn't see each other. And the turtle just consistently moved, and the rabbit all the time stopped. That was an interesting video. Yeah, absolutely. I saw it. You'll see people posting thousands of gains here and there, but what really matters is account growth over time. Patience is key. Amen. Exactly. Fully agree. And that's also the reason why in the Discord group, for example, I don't want to see all those percentage screenshots. It's also one of the rules. We actually don't allow this because it messes with people's psychology. First of all, other people in the group. Plus, it's not it's not how trading, in my opinion, should be. Probably like a $1 trade, trying to snipe the low, 10 times wrong, 1 time right, post a 1,000 gain. You know what I mean? You can have them now and then, but it's much better for other people and the community to not see that stuff. And usually when people post these type of things, they only post it for their own good. They want to get compliments or want to see, oh, you've done so well, that sort of stuff, instead of helping people, because something like this does not help anyone. Best Elliott Wave trading channel on YouTube. Yo, Henning, welcome. Oh, damn. Henning, I have to reply to you on Instagram, man. I saw your message coming in. And I've also read your message while I was traveling to Cap d'Ale last weekend. So, no, not last weekend, recently. And let me have a look here. I'm currently in my Instagram. So I have to, by the way, nice story. Of course, won't repeat, but you have a very, very interesting story with your business. So Henning, everyone, he is an entrepreneur himself in e-commerce, and great background story. But I've seen your messages but got a reply. So gotta get to it. Thanks for popping in and writing something, man. So yeah, if you're interested in e-commerce, by the way, then Henning is your guy. So I guess if people Google your name, they'll probably end up at what you do. Sarah, welcome. How is your health? I'm doing good physically, mentally, everything alive and kicking. So far so good. Of course, as the amount of projects grow in the background and things need to happen, it's not always easy. Even if you, like Jeroen and I, we work together all the time, right? But yeah, there's a lot happening. So sometimes stressful, but that's part of the job. No? Solid Fab, Dasek, welcome. Erik Dorian Laflamme, nice hat, thanks. Andrei. Spartan race in Romania. Yeah, my first time tomorrow. I've already done an obstacle race in the Netherlands. It wasn't called Spartan, though. So that was, I did the Iron Viking. That was the one I did. Shooting championship. I play piano since I was 6 years old. Yo. Now, I can teach you Elliott waves. You can teach me the piano. During the live stream. Oh, wow. You cleaned your guns yesterday during the live stream, the shooting championship. It makes me think of the Olympic guy. The guy without all the tools and all the gear on his face, just casually stands with the hand in his pocket, right? And then, yeah, that one went viral. Guitarist, yeah. It's a nice instrument as well. Bina, welcome. Mother Erd. Senat, Adrian. Yes, I'll make sure to check it out. Carl, Dawa, Madi, welcome guys. Welcome. So, okay, let's start with the analysis, shall we? And before we start, I'll just repeat, as more people are coming in, there might be some increased volatility. We already saw a bit of a spike here, but we do have some news here. Friday, October 4th, 2:30 p.m. As mentioned in the previous update, I was going to be live as this hits, and we can observe the price action together. And you can see the candle, right? So, and you can also see the volume, by the way. So typical for these type of events, taking the highs, taking the lows. So both sides of the very, very local 15-minute range have been swept. Hopefully you didn't have your stop loss at either side. And generally, of course, recommended, no financial advice, but it's just a general industry recommendation, I suppose, that when there is news, watch out with your trades, be careful and be patient. All right, be patient. So I still have the same two levels on my chart here. Point of control support below 59.5. Daily naked point of control above us as resistance, 62.5. And yeah, we're just ranging in the middle. And of course, we're going to start with the Elliott wave analysis. So yeah, let's get this going, shall we? I will go to the daily time frame again, because I do like to say something on the daily. So in the morning, like the previous update, I spoke about the daily. So we're gonna mainly focus on the lower time frames during the stream, but I just want to pop this in quick on the daily time frame, right? So I started with the low probability scenarios, which are the bearish ones, right? So the bearish scenario is expanding diagonal 1, 3 wave 2, down for 3, right? Invalidation is clear. Expanding diagonal is very rare. It's never preferred unless everything else fails, but we need to have it on the chart. So this is a low probability scenario. Trading is not about certainties. There was a comment I saw this morning from a guy called Mad Dog, and he didn't really understand the fact that price can move up and down, but it's about probabilities, right? Probabilities of price moving up or price moving down. And that is what you then use in a trading plan. Now, I think there's, of course, in the industry, quite a lot of like retail traders or people that tend to look for, oh, price is going that way, or price is going that way, right? It is going up, it is going down. And they're looking for that certainty. Which is something I experienced when I started my journey back in the day. I was looking online and checking everything out online, to try and find a feeling of certainty of, okay, if I do this with my position, I'm going to be good because they say it's good. You know what I mean? But there is no certainty in trading, only probabilities. And as an analyst, a good Elliott wave analyst always has bearish as well as bullish scenarios and knows the probabilities between the two scenarios. So hopefully that also answers the question that I received in the comments earlier, as someone was confused there. So this is a bearish scenario, low probabilities, right? So it's not preferred. Reason is expanding diagonal in one, very rare. And the high over here that we have on the chart is made before the 0.382 fib time, which is also very uncommon for a wave 2. If you look for 1, 2, 3, preferably your 2 ends after the 382, right? So there you go. And then the second scenario, right, also low probabilities, is a double 1, 2. 1, 2, 1, 2. Two reasons it's low probabilities. First one, the price action of this wave 2 hit the 886, which is very rare. Whoa. Holy moly. Which is very rare, right? And we don't like to see that. That's very rare, never preferred for a wave 2 hitting the 886. Right, more common for a corrective structure like a B or X, increasing probabilities that this price action here is corrective, not impulsive. And then we have another one, 3 wave 2, but this 2 is 7 times longer than 1, which is also very rare. Right, like a wave 2 common target in time is the 382 to like a 4 fib time. The high has been made after the 7. So it just lowers the probabilities, right? So there's elements that you look for that either increase or decrease the probabilities, right? And an 886 impacts the probabilities when hit. A 7 fib time for a wave 2 impacts the probabilities for this scenario, right? Negatively. Same here, expanding diagonal, negative probability. Ending before the 0.382 adds lower probabilities, right? So therefore the probabilities for these two bearish scenarios are not great, right? Which then leaves us with the bullish scenarios. And therefore on the daily time frame, this range over here, as it stands, your bullish scenarios have a higher probability based on the information that we have now, right? You always use past price action for future predictions. The probabilities are higher for the bulls. Now I have 2 bullish scenarios here, by the way, and I will add one more. 1 second here, gotta find it somewhere in my folders. I think this is, yeah, this one. So let me add this one. Spoke about it only very shortly in the probability section in the morning video, but cool. Bullish scenario, the most, I guess, logical one, which you'll probably see in many places, is the diagonal. Now for me, the thing is, so a diagonal, by the way, is what you see over here, trend lines converging to one another after a finished 3-wave structure on top of great support, by the way, we had here. And then you look for continuation, 1, 2, 3, 4, 5, rejection and continuation. Now for me, it's like when things become too obvious, it makes me think twice, right? And this is quite obvious, and the reason it's relatively obvious is because of the 3-wave up, 3-wave down, ABC up, definitely potential for a 3-waver here, and then you're going to be looking for another 3 down. Now with a diagonal, preferably we wait for wave 4 to be in and then look for the wave 5 up. After a 4 is finished, we can become a bit more confident in diagonals, but this of course is a bullish scenario. The minimum target for a wave 4 has been touched, right? So that is fine, but you can see that this move so far is very short in time compared to your 1, compared to your 2, and compared to your wave 3. So if we are looking for a diagonal, then preferably your wave 4 is not yet finished and you get a bigger structure, right? A bigger 3-wave structure inside wave 4. So preferably you would still look for lower. And that's purely based on time, because the price target has been hit, right? So if you eventually, we got to wait a little bit on the 1 hour time frame, but if we can count a zigzag family structure to the downside with a good amount of probabilities, that's fine for a wave 4. It's just that time wise, this would be very short, right, compared to previous moves. Let me have a little look here, take a fib time. Yeah, low is in before the 382. So that's not preferred, right? It just lowers the probabilities. And there you go. So preferably in this scenario, you still see some more downside for your wave 4. And then you want a 3-wave structure up in a 5. Take the high of 3, that is a must. And then look for 2 and up you go, right? So this is a bullish scenario. We look for price to move up. Now another scenario that does exactly that, which is actually more bullish. Now I honestly, I didn't want to show it today, but it just happens to sometimes go this way. Of course, your most bullish scenario is that you also take this high, but you continue. Now, the reason I didn't want to show this in detail in the morning is because these scenarios, short term, are exactly the same, pretty much, right? So you have your diagonal here. This move down has to be corrective, right? So a 3-wave structure, not a 5-wave structure. If it is a 5-wave structure, then impulse, correction, impulse. We look for a bigger 3-waver. You want a 3-wave corrective structure to the downside, increasing the probabilities to take the high, this one here. And once price then moves up and moves towards that high, when we take this high, we will know if the probability is higher for continuation, up in a 3, right? Or wave 5. But the price action short term is the same, because in the diagonal in your wave 4, you want to see a 3-wave corrective structure. But also in a multi 1-2, right, you want to see a 3-wave corrective structure. So therefore, between the two, short term is relatively similar, right? And in both cases, you're going to take out the high. The main question becomes what happens after. But that is something that we see it once we actually get closer to the high. So sometimes, like, I do try to limit showing the amount of possibilities, because price action is similar between certain scenarios. And we only know, are we in a multi 1-2 or a diagonal, if we eventually start moving to the upside. In this scenario, though, quickly cover it, multi 1-2. 1, 2. One has to be an impulse in this scenario. A little bit tricky. There is a possibility to count this as an impulse at least. But this then has to be a flat ABC. Also difficult because of this move looking better as a 3-wave structure. There is a slim chance of counting this impulsive. I've done it in past live streams where I did find an impulsive count here. So it is possible, at least. But you do see that your wave 2 is 9 times longer than your wave 1. It's again, it's all probabilities. It's not too awesome, so to speak. And just to add to the extra confusion, so yeah, like I'll just like, again, it's about this needs to be a 3-wave structure down. That's the only thing you have to remember. If you're like, holy shit, this guy with all his different scenarios, what the fuck am I looking at? The only thing you have to remember, 3-wave structure, take the high. And then we take it from there. So that is why I like to focus on the 1 hour, like basically the previous week. I think like in most videos, we have been covering the 1 hour time frame, because that is where currently the most important price action is happening. Right? If this is a 3-wave structure, we look for the high. If this is an impulse down, we look for a bounce and another leg down. And this second leg down is going to be either a wave C, going to be a wave 3, whatever, right? We'll then figure that one out, no? So we take it step by step. Now this here, WXY, triangle in Y, and then you have 1, 2, and you look for 3. No? So, but yeah, triangle in wave Ys, it's not like something that you see very often. So, I prefer to hang back and let the local price action speak to me. But there you go. So the probabilities, by all means, are higher for the bullish scenarios, right? Where we continue the trend and we still look for all-time highs. It's not going to happen tomorrow, right? It's not going to happen next week, but in time, imagine it happens next week, but in time, the trend is up. We still look for price to move up. The range so far from March till where we are now counts better as a corrective structure, not an impulsive structure, to the downside, which basically means the probabilities are a lot higher for the bulls and a continuation of the trend on a weekly time frame, right, as well as the daily, compared to bearish scenarios where you are going to see a bear market to like much lower prices, right? That actually makes me think so this is at the moment a lower probability bullish scenario, but I want to cover it anyway, also because we do have bullish CVDs here, by the way. But another bullish scenario still is taking the low and then move up. I don't want to go in too much detail, did it this morning, but this is part of a bigger corrective structure, either an ABC flat, or if you move X over here, then you look for a zigzag ABC or a flat. Still bullish, but at the moment lower probabilities than taking out the high, and mainly thinking about the bullish CVDs here. We don't have too much confirmation yet of local price action. Is this a 3? Is this a 5? We're still working on it. But we do have bullish CVDs building, which is something I keep in mind. Okay, cool. 1 hour time frame. So by all means, only thing you have to remember, daily time frame is probabilities are higher to move up. And continue the bigger trend, which is, of course, I think what many people are also just waiting for, you know, like, damn, we've been in this range for so long, you know. Actually makes me think what the volume has done. I mean, yeah, you can also see it just by looking at the volume. You know, people get bored, right? They're like, yeah, whatever. And when there is action again, you know, people will jump in. But I have a, like, when you see this type of stuff, like volume moving very much to the downside, it's like people on the sidelines waiting, clarity, maybe accumulating, also possible, distribution. Anyway, 1 hour time frame stuff. Moving this out and moving this in. We're going to check the 1 hour now. So on the 1 hour time frame, on a Thursday, we analyzed this part here with the morning video, the live stream, and then of course the video, I think in the evening, did I? Or did I say live stream? Doesn't matter. But the probabilities were higher to look for a move towards the upside. And we did not take this low. I'm actually not sure if I still have these probabilities. No, those are from earlier today. So the general probabilities were to look for a bounce and certain signs of strength. Now, one of the scenarios we had on the chart is this one over here, right? Where we were looking for a bounce to the upside. This is your bearish scenario, by the way. So 1, 2, 1, 2, 3, 4, ending diagonal 5, and then 4, 5. Now I have to update this scenario because we cannot count an ending diagonal here. And the reason is that we never got another low. So what we then have to do now is just, usually I do this stuff in the background, right, instead of doing a live stream. But it's been a busy day. So now we have to do this and this. This is one scenario. 1, 2, 1, 2, 3, 4, 5, finished impulse. 4, and then 5, right? This is again a bearish scenario. Alternative. 1, 2, 1, 2, 3, 4. No, that is indeed the scenario. I'm thinking while streaming. So 1, 2, 3, 4. Okay, yeah. Your alternative So let's first start with the target area before I talk about the alternative impulse here. So your target area taken from 2 to the low of 3 here, 236.05, 61.4, 63K. Invalidation, 63.7. That's an important one. Your alternative impulse, and I'm never a big fan of seeing the highest volume in a wave 5. Sorry for that. So is this, right? And then in this case, you have an ending diagonal in a wave 5. Now, I'm not a fan of this scenario. It's not my preferred scenario. It's also not a highest probability scenario. Your wave 3 is shorter than your wave 5, which means wave 5 is extended, which is by itself already rare. Plus the highest amount of volume, therefore, is also in 5, which is also rare. So therefore, this is an alternative. And you look for a 5, 3, 5. But I don't have it in my folders. I just wanted to show it. Okay. Your bullish scenario is that you have a finished structure here. To the downside, of course. I'll answer that question in a second, Sarah. So what we have going on here, right? This is a little bit tricky because from a trader's perspective, right? The probabilities here were higher to start looking for a bounce, and now we have a bounce, right? So we were waiting for it, we were looking for it, we get a move to the upside. 1 second. So this is what we wanted to see. But if we want to get down here once again, right? Then we need to see signs of weakness. And at the moment, we do not see signs of weakness. So looking for price to move down in, let's say, a bearish scenario, a wave 4, at the moment, we are moving to the upside and we have some volume coming in as well. So naturally, before I get interested in shorting again, I would need resistance. I would need price to go sideways again, right? Proof of weakness. And then I'm interested in moving to the downside again. At the moment, we just move up, increasing volume. And a general tip from an Elliott wave point of view that we always give here is that if price is moving on volume, wait for a range to form, as a range will give you all the information that you need. So at the moment, we're just observing this move up. And there's been no weakness, no market structure change. Price is just grinding up. And yeah, now we have news and it's still moving up. No? So, of course, your most bullish scenario is a finished structure to the downside. It's a bit tricky, though, to count a nice, like, 3-wave structure to the downside. So let me just remove some of the clutter. WX. Let me count here. Oh yeah, I think this was Bettina. So if we do want to count some sort of a finished structure, then we need to do A, B, and the C. Where this is a wave 4 matching this wave 2. Is it preferred? Wave 4 is smaller than 2, which is lower probabilities. But then you have 1, 2, 3, 4, 5. Correction. 1, 2, 3, 4, 5. Finished A, B, C. I mean, that's your most bullish scenario. And of course, after wave C, you want to see impulsive moves to the upside, and you want to see price moving. I'm a bit skeptical still about just continuing up and taking this high without taking this low. Not too big of a fan of counting an ABC here to the downside, but it is a scenario that we keep in mind. I think Bedina posted it earlier today as well. What would be nicer from an Elliott wave point of view is to, not the blue count, that one not anymore, but actually have a wave A, wave B, and then a wave C, flat structure to finish B, and then you move down again for C and take the low. Invalidation is this high, right? 64.1K. that you're in validation for this scenario. So look, the probabilities locally at the moment, right? So here we were looking for price to move up. We got to move up. From an Elliott wave point of view, like, and if we want to count a nice structure to the downside, you preferably still take out this low, either in a 4 and then a 5 down, what you see here, or you look for B and then a C down. However, I am not interested, and this is trading versus reality, I suppose. I'm happy, right, in long positions. I do not care about going against the local trend unless I start to see weakness, right? So it doesn't make sense for me to, yeah, okay, I got scenarios in my folders here, but I need to see weakness first. So this move down, right? Price moving to the downside. Every video we made, every stream we did, probabilities were higher to move down. We got into the range here, probabilities higher to move up. Price is moving up, right? Like, I gotta say, pretty insane win rate in my portfolio this week. Price moves up. Wait for a range to form. No? No, we don't actually have an 886 at the low. That's the reason why I also didn't cover it. I did get questions about it. So what people tend to do is they just pull an 886 from a low to a high. I got this question this morning as well. So what people probably do is they just do this and then, oh wait, 886 is hit. However, when I see a three-wave structure like this, and you sometimes see me do this on live streams as well, is that I don't pick the highest high. I pick one lower. Because there's the potential here for a move up and this to be a wave B or a wave X top. This is 5-minute time frame, so I don't really like to analyze this in detail. But if you pull a fib from the high to the low of this first structure down, toggle on the 1.618, you can see it's not touched. If the 1.618 was touched, probabilities were low for this to be a B or X. But now I can't disregard it. So if you pull an 886 from the low to this high, and you drag it to the right, and you zoom in, it's actually not touched, which is the reason why I did not cover anything about the 886 locally when the low was made, because with that pull, the 886 is not touched. So I can't cover it. So it's of course like using the 886. So I understand the question. I think this morning it may be Ace Winner, I believe, was the one that asked the question. I can imagine people pulled the 886, but you got to be aware when you see a three-wave structure like that to the upside, right? Like just pull it from both of the highs. And what I generally do is I pull it to the lower high, or if to the higher low, and then I want to see that one touched to give me more confidence it is actually touched instead of having a wrong pull potentially. So just because of it missing out with the lower high, that's the reason I didn't cover it here when the low was made. Cool. So yeah, I mean, daily probabilities, right? They're clear. They remain higher for the bulls. The expanding diagonal bearish scenario and the multi-1-2 to the downside, those are bear market scenarios, are lower probabilities on the daily, and on that means on the daily probabilities higher, of course, for the bulls. In a diagonal though, so in a diagonal to the upside, preferably you get a bigger three-wave structure because of time. Where is it? This one here. But we just have to observe the 1 hour time frame, which we have done. So yeah, price was moving down, very, very nice. But I can't deny that on the 1 hour time frame, so this is my trading Kun versus Elliott wave brain Kun. So I'm in a move up, right? From an Elliott wave point of view, it is ugly to end something here. 1, 2, 3, what was it, like an ABC? 1, 2, 3, 4, 5, A, 3 wave B, and then an ending diagonal in a C. Very short 4 compared to 2, right? I don't know. It's not. I don't like it. So from an Elliott wave point of view, it would be nicer to still take out that low at a later stage. And the probabilities from an Elliott wave point of view are higher to look for a 3, 4, 5, take out the low with a 5, or look for a W, X, and then a bigger A, B, C, and a Y, and then finish C, right? But in both of these scenarios, we would be looking for price to move down, and the invalidation is quite similar. 63.7 for an impulse, and just a bit higher, 64.1 for a WXY. Resistance to the upside, one that I keep an eye on, is 62.5, which is the daily naked point of control. So, yeah. Yep. So that's the Elliott wave probabilities for you. Oh, cheers, Trevor. Let me quickly write this down here. So we have more than enough time also for questions. Oh, wait. Elliott wave, when did we start? I think 14. Oh, I have to show you something, by the way. I'll get to the questions here and stuff in a second. So I got a Garmin watch at the moment. I received it from my wife as a birthday gift, and I love it. Like I love all the I love the human body, so I love to see all of the information, heart rate, breathing, like all that stuff. You know, I'm a big fan. However, I was trolling around in the shop in the Garmin IQ shop for the ones that have a Garmin and, you know, probably outdoors a lot and you love sports. You might have one of those. So I found, let me show you. Can I show it like this? If it's yeah. So I found a background where you can see Super Mario. 1 second. Come on. Yo, how cool is that? And then every time, like, you get it just continues. It's a different animation every time. Like, that's fucking awesome, man. So I really saw this one in the shop. I was like, yo, I gotta get this. I gotta get this. Like, my background. So I used to be a professional gamer, for the ones that don't know. And of course I played Mario. There was also a Pokemon one, and I actually tried to download the Pokemon one, which is related to your steps. So if you like if you walk during the day, and the more steps you make, the more like areas of the Pokemon Yellow, like back in the day on the Game Boy Color, the more like areas you see on your watch, yeah. Now I got Super Mario on my watch, so really cool. I didn't actually know, like, you're not allowed to go in a sauna with the watch, or it's not recommended. I went to the sauna with my watch. Oops, that thing was so warm. I was like, wait, is this good? It wasn't. So do not do that. I made that mistake for you. Okay, we were here. I guess bias probability, price going one way is just higher than the probability. Yes, exactly. It's in the end, the only thing we can trade, of course, is probabilities, no? But I like and everyone besides, like, so many Elliott wave traders, and you'll see it online as well, they use an additional set of tools. So many Elliott wave analysts online, you'll see them use RSI, which is something that I actually don't like to use. Might be one of the few. I prefer CVD over RSI any day. As many of you will know, I'm a big CVD user. Which, by the way, is you can see absorption of market longs and market shorts by bigger fish in the market, pushing price up, down, whatever, but it's a really, really, really good tool. So I love using that in combination with Elliott waves as well. Yeah, sometimes I purely trade Elliott waves. Sometimes I use additional tools. I use a mix of, but yeah, many do use additional stuff. So, okay, probabilities, the directional bias that Elliott wave gives is up or down. And then you look for, like in my case, my strategy gives certain elements and I'm looking for things in that direction, for example. What's up, AJ? Or like, I'm unfamiliar with this stuff. Same in every Elliott wave candle. She's an actor, I believe. You know? We have been in this range for so long. Time capitulation. Yeah, maybe like people are like bored or they get very bearish or very bullish. I don't know. I don't really follow Twitter and the crypto industry too much, besides just doing my own thing. So I don't really know what the sentiment is, but I do know things change very quickly. If price goes up a few dollars, everyone's bullish, and if we go down, everyone's bearish. Yeah, I don't really follow much online. When I watch content online, it's usually either Trackmania related, it is car related, it's Formula One related. It's generally it has to do with with racing or cars or something. David, welcome. It's on the 1 hour. We have expanding flat, and we expect. Yeah, so the probabilities from an Elliott wave point of view would still be higher to take out the low. So of course over here we knew like, okay, based on the local structure, we were looking for price to still move up, right? Looking for a bounce. But it's not nice to count an ABC here. It would be an ugly structure from an Elliott wave point of view. And the daily naked point of control above us is like, it's important resistance, really. The Discord button is not working. Beeman, do you by any chance made a new profile? Or do you have an existing profile? Because we do have a protection in place that if your account is younger than, I don't know, 1 or 2 days, you can't get in. Let me know. Because else we have to check out the ban list and just unban you there. Christian, thank you. I appreciate. Oh yeah, as difficult as they are now, when there's no one priority scenario, all scenarios. Well, this bull market so far actually has not been very difficult. So, of course, you have individual scenarios, and people can give the highest probabilities to a scenario, right? Now, what I at times prefer to do is giving higher probabilities to taking the high or the low, which gives me a directional bias, right? Unrelated necessarily to the exact individual scenario, but I know what area to look for, like what to look for. So on a daily time frame, the probabilities of this range are higher for bullish scenarios, that this is corrective and we are looking for bullish scenarios, EA, the diagonal that we have, potentially, of course, a multi 1-2 as well. Those two at the moment have a higher probability compared to the W and then X and the Y, right? But the probabilities are higher to look up. And that is the directional bias that is so important, right? So on a 1 hour time frame, when price was moving to the upside here, maybe you remember at the end of last week, right? So as price on Friday was creating the top, we had our resistance here. I think I still have it. Oh, here we go. The probabilities here were higher to look for price to move down based on our analysis of the move to the upside. And we have resistance. And then we ranged sideways, bearish CVDs, and down we went. And then as price moves down, every time it was ranging, the probabilities, even here on the 15, were higher to take out the low. So what I mentioned is, hey, probabilities are higher to take out the low, or probabilities here are higher to look for an impulse. And now, of course, price was ranging here, probabilities are higher to look for a bounce. Right? So I sometimes use more a general terminology, sometimes an exact scenario, but on average, it's more important to have a probabilities for the direction than an exact scenario, because Elliott waves is very fluent. Based on new information, scenarios change. Of course, on the daily and the weekly time frame, things change very slowly compared to a 1 hour 15 minute. But it's more important to know your probabilities for, hey, we're expecting price to move up. Instead of seeing a bear market, we expect continuation of the trend. That is much interesting information than trying to snipe the low with an exact scenario. You just need to have a plan in place. I think a great example, let me use this. So you can go to my content on the 3rd of January this year. I won't forget that live stream and the morning update, because I had the most amount of viewers ever. So we hit resistance, price was moving down. This is a diagonal on the lower time frame, by the way. And we had bearish CVD divergences, and the probabilities in my morning update here were higher to take out the low. So that was what's written in the video, is like, oh, probability is higher to take the low. Did I know that price after taking that low was going to dump for almost 10% from the low? No, I didn't. Right? Because it's incredibly extended. But it's not about knowing how far something goes in this case. It's about being on the right side of the trade. And I was. Probabilities were higher to take out the low. And then based on the reaction you get after the low is taken and the move, you can adjust, right? You have maybe support areas and whatnot we had on the chart. I also remember we had a horizontal support resistance area over here on the chart, right? So you got to know your TP levels, got to know your like blah, 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 blah. But the probabilities were higher to take the high or the low, sorry. Which we did. A 10% move down in a few hours? I don't know, right? It just happened. Do I complain? No, because I was on the right side of the trade. Right? I was on the right side of the move. I also remember the price action here. So we had a scenario, a bearish one here, and of course the bullish one was continuation. Now, as price was ranging here, probabilities were higher to take out the highs, right? Go to the videos of 5, 6 February. Probabilities higher to take out the highs. But we had a bearish bigger scenario, and of course the bullish one is continuation. The difference is resistance. Do you get a bigger sideways range here? Yes or no? Now price took the high of the range, so I'm on the good side of the trade, right? The highest is taken. Do we know exactly the highest probability scenario? No, probabilities were higher to take out the high. And what are we waiting for? Signs of weakness, and we wait for a range to form. From an Elliott wave point of view, that's what we want to see. As long as you don't see a significant range, you just look for up. And as you can see, everything here was very, very short. And then you hit the 886 from the high to the low, and the 886 touch, probability is high to take the high, and the next, and there you go. So that is also how a potential planned day trade scenario can turn into a bigger swing. You're on the right side of the trade, probabilities are higher to take out the high. You look for an entry, right? My entry was somewhere in this move down here. It was quite high in the range, right? And my stop loss was here. I remember that. And then the moment we took the high, put my stop break even because I want to be safe. And just see what happens. But nothing happened. We just continued. But we took the high. So the probabilities played out. And then because I also upload quite often in a day, we can just observe if anything happens. But nothing happened. We just moved up. So depending on certain structures. So for me, the price action in this bull market, right, from 15K to where we are now, is actually by no means difficult. But instead of always trying to pick one scenario, look at the conglomerate. Is that a word? I don't know if that's the correct word, but look at the different scenarios you have and decide the bulls, right? The probabilities are higher to take the high than the low, right? And if you can decide on those probabilities, you can try to find an entry. So that is, of course, also locally on the 1 hour time frame here, right? We moved into the daily naked point of control that we had here. And we started ranging sideways, 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 sideways. And then on Friday, or sorry, Thursday, because it's Friday today. On Thursday here, right, we were, first of all, the thumbnail of yesterday morning or afternoon was looking for lower because the probabilities were higher to take this low. Check. Probabilities during the live stream played out. We took the low. And then we observed the price action. Right, and then in the evening update yesterday, I said, hey, the general, so there you go, right? I wrote general. Probabilities are higher to start looking for a bit of a bounce, right? Either take the low and up, or we look for a move up. But I'm more interested in looking for up, right? Unrelated necessarily to an exact scenario. That's why I wrote general in the probabilities. And yeah, here we are. So price found its way a little bit to the upside. So I think if someone tries to be too precise, it might actually hurt them because they don't have the flexibility to change when the chart gives you signs that go against your scenario. So you might be very, very stuck. This is a great example. So here, 1, 2, 1, 2, 3, 4, 5, 4, 5, impulse. You either count this as a 1, you count this as a C, or you count it as an A, no? Now, of course, and us included, had one of the options being this, a wave 1, and then look for 2 and 3, right? Now, the danger is that if you have one scenario in mind and you don't really consider other opportunities or local signs of strength or weakness, you might get yourself in a bit of a problem. So of course we were also looking for a 1, 2, 3, and of course there's always the potential for a C because that's your bearish alternative. And as price moved down here, look how sharp it is. Every bounce that we had as well had bearish CVDs. There was no bounce, no support here at all that gave any bullish CVDs once. I'm not interested, no? Like, it doesn't really trigger much. So I don't want to go in with my full size or full position when I don't see that strength. Right, so yeah, there's sometimes it's better to have like a general perspective of the market and know, okay, probabilities are higher to take the high or take the low. Probabilities are higher for the bulls than the bears, instead of saying probabilities are higher for this one scenario and then potentially marry the scenario. But as new information comes in, you are so stuck with your position of my position is based on this scenario, and now I see signs against it, but you know, whatever. You're so focused on one thing, you might actually lose your flexibility, which I think is important in the market. No? So no, the bull market so far for me has been easy to count. $66 to 60 as a wave 1, now looking for a wave 2. Yeah, so then you have your wave 5 here is the largest with an ending diagonal in 5 then, I guess, in ace winner here. So your wave 5 has the highest volume and is extended, which are two things that, I mean, if 5 is extended, it generally has the most amount of volume. But it's not common for 5 to be extended. So that is why I hold back with counting a finished impulse here until I have more information. If you take a fib from the high of wave 2 to the low of wave 3 to the high of wave, wave 5 usually ends. No, the common target for a wave 5, high of 2, low of 3, high of 4. So your common target for your wave 5, now let me do a bearish example. First, you take a Fibonacci from, oh wait, let me label it as well. No? 1, 2, 3, 4, 5. You take a Fibonacci from the end of 3 to the end of 4. And then your common target is between the 1.236 and the 1.618. Then you take a trend-based fib extension, start of 1, end of 1, end of 4, toggle on the 1-to-1. So you're creating an area for 5. And then you take a trend-based fib extension from the start to the of 1 to the end of 3 to the end of 4. So you need to know the end of 4. And then toggle on the 0.618. The 382 I'll explain another time. That's just, it's not relevant for now. So the 0.618. And this then gives you an area for your wave 5. So a 0.618, if pulled in the right way, would be one of the options for a 5. I answered that one already. Okay, so, sorry, Matt. Offline, stop sharing ideas in Diamond. So I got a question recently. I think it was from Mr. Brownbug. And he was talking about what's your vision long term for the channel. So I've been working on those type of things, and of course ideas. So I don't want to be a signal channel, right? So I want to share ideas. I love to share the strategies and the way I trade. But one thing I definitely do not want is to be a signal guy, because it attracts the wrong audience. It's not an audience I want. What I instead do soon is go live, right? I actually planned it for today to put in my agenda when we can go live for Diamond, to explain the strategies in more detail and some of the setups as well over the past time, right? So showing a couple of examples and how it works, because I believe more in showing how it works than necessarily like this or that trade is one I'm going to take. And then 2 is how to develop a strategy. So we run through the 6 steps so that people know, like, of course, I've already made that video, but I got a request from, who was it in the group? Someone in the group in Diamond asked me, Yo, Koen, could you go through the 6 steps again? But then we make a mini strategy. So instead of you showing how you trade and your statistics you collected in the past, and and explaining the process in detail, which I already did in a long video, it's more, okay, can you go through the 6 steps in like a short period, like a live stream, let's say, and just quickly show how it works in like creating a mini strategy, basically, instead of the longer video where I explain everything in detail on how I did it. So that is coming as well. But I have for a while now stopped sharing like ideas / signal things there. It's because I'm hesitant on doing that moving forward, because it's not something I want. I don't want to be a signal guy. I think signals really hurt the industry. It hurts people knowledge. And even though, of course, it's been great times, I watch out. So I just lowered my frequency, first of all. And second, with the morning updates in video format, not too many people watch. So then I went to writing, which many people read. But as I support very much the educational element, build your own strategy, learn or mine strategy. And then it's better people learn the strat and then implement it themselves and ask for feedback, right? That's what I like to see. That is helping people to fish instead of some join Diamond only to watch that ideas channel. Those are not the people that I look for. Have you tried Deep Dip too? I haven't. What's up, Kelly family man? I haven't, no. What's up, BBL? No, it's not a trading view indicator. So this one is in AGGR. And the reason that I don't use a trading view one is because, well, first of all, there's no good CVD indicator in trading view. Obviously, else I would, of course, use it in trading view to keep everything in one platform. But there's something with the calculation of the candles and the information you can extract from the platform trading view to calculating CVD, which is different than AGGR. Now, I gotta go to like the developer to really know the detail because I'm not a developer, but it has to do something with the information. Now, there might be a way to create something that gets as close or potentially better. I don't know, but I have not found it. So currently on TradingView, there's quite a lot of like CVD stuff going on. You can see it here, cumulative volume deltas. I've not seen one that is better than the AGGR that I use. So at the moment, that's why I use the AGGR CVD. Wizard, welcome, man. Wow, that's been a while. Popping in, old school, well. I follow you on Instagram and enjoy the content you upload. Cheers, man. Thanks for following there. And yeah, I'm active on the stories, not so much with the posts. I gotta post a bit more, but I like the story element, and people can see sometimes what I do on a daily basis, or But yeah, cheers. Nice for you to pop in. Welcome, man. Hopefully your trading is doing well. Rocket Bunny from 49k from daily. There's no completed 5 impulse wave. It is a tricky one. That is why the diagonal is an option. Was the last bull market more difficult than this one? I don't really compare bull nor bear markets. It's the same but different. It's still Elliott waves. It's still just counting the ranges. The previous bull market had ranges that were easy or difficult. Or I should actually say different. It's never difficult. It's either a simple corrective structure or a complex corrective structure. But no, I can't compare them. It's just a different bull market, different economics, different vibe. It's just a whole different bull market, right? Every bull market is just completely different. Yeah. Yeah, I actually wouldn't know, Andrew, how much it would be to really develop something in detail that actually works on TradingView. But maybe one day, check it out. RSI is laggy, that's correct. That's the problem I've so often. Is there a systematic approach to overcome the apparent contradiction between, on the one hand, the Elliott wave probabilities, and on the other hand, the local price action uptrending? Is there a systematic approach? So systematic, the contradiction, Elliott wave probabilities, local price action. Is there a systematic approach? By the way, New York Open. I mean, is it systematic? I don't know if it's just my experience or systematic. I mean, everyone has, of course, another system, another way to trade. But as the probabilities from an Elliott wave point of view last night were higher to look for a bounce up, right? Either take this low once more and then up, or move up directly with the potential of coming down later, which depends on the move up. I was looking for a move up. Now, of course, from an Elliott wave point of view, to have a clean structure, it would be nice to take out this low at a later stage. But my systematic approach would basically be, we move up, price is trending up, perfectly fine. As long as price is moving up and you see volume, I need to wait for a range, preferably hit some resistance like the daily naked point of control. But I would need to wait for a range and then look for signs of weakness according to the tools that I use to look for price to move down again. If we see ranges and every time there are signs of strength in a range, like bullish CVDs, from just to say something, no? I mean, you're going to be looking for price to just move up. And as long as there's no weakness, I'm not interested in looking for shorts. I'm interested in looking for up. So the systematic approach, I suppose, is more, what is your trading plan? And if you do want to look for a short to the downside, what signs of weakness do you look for? What resistance? What do you want to see? Certain candlestick structure. You want to see 5 waves down, 3 waves up, and then 5 waves down, and then take the low. Bearish CVDs, RSI, MACD, whatever, right? So your systematic approach would actually be your trading system. No, I don't, Andre. At least, no, I didn't. I actually don't. I didn't even knew there was the WSOT on Bybit, but we do have a 100K championship going on Blowfin. But on Bybit, I don't have a team. I didn't even know it was there. But I also don't trade on Bybit myself, so I don't really follow. And the team from Bybit, we rarely ever communicate. It's just I have it as a spot partner. But yeah, I'm thinking about cutting a couple of partners that are basically completely irrelevant to the channel at the moment. Right. Less is more, and Bybit would be one of them to cut. Cheers, Cole. You heard that on October 9, a film about Bitcoin was released on HBO. They promised to reveal who Satoshi Nakamoto really is. If true, it will be a shock. But that's the question, no? If true. I mean, I actually don't know about a movie, but it's funny, it's interesting. But even if it's mentioned in a movie, how does one know it's true? So, I mean, everyone can shout, "Oh yeah, I'm that person," you know. Yeah. So I think it's interesting. I mean, maybe it's marketing, right? Because they want many people to watch the movie. The more people watch, the more money they earn. So if they say, "Oh, Satoshi Nakamoto is going to reveal itself," a lot of people will be watching. They're going to cash in. No one knows shit after the movie. So let's see. Might be a fun marketing campaign though. I mean, even if he reveals his account, we still don't know, right? How many does it like? So no one knows who he is. No one knows how much he holds. Does someone know? No one. And yeah, maybe there's people that bought so much Bitcoin in the first few years and are still hodling. You know, if they have hundreds or thousands, of course, we're talking about thousands or 10,000s of Bitcoin. Does that make you a Satoshi Nakamoto? You know, so I think it would be incredibly difficult to argument who it is. You know, I think like Enki most likely will never know who it is. We can only be grateful for the fact it's there and that we can trade it. By the way, Lawrence B, welcome. Good to have you here. My security analysis semester exam is nearing Elliott Wave chapter. Makes me interesting because of you. My security analysis semester is nearing Elliott. Oh, the Elliott Wave chapter. Oh, you're actually going to learn about Elliott Waves? Wow, BBL, you will now have a great, like, I don't know if this is correct English, but a good advance on your class. Like your level of knowledge about Elliott Waves, of course, is probably a lot better than anyone in your group can imagine. What kind of weakness in range? Oh, weakness. What does weakness mean? So it depends on your tools, no? So if you have a support resistance area, for example, imagine you had a support resistance area here. A sign of weakness would be for it to lose. No? You can look at RSI divergences, move up, retracement, move up again, and then an RSI divergence on the indicator. Maybe a volume divergence, moving into resistance, volume decreasing, rejecting, volume increasing. Right? You can use volume as well. Bearish CVD divergences can also be a area or a sign of weakness, right? Retracement, up, bearish CVDs, price moving down, takes a low, CVDs plays out, volume increasing, support turning into resistance again. So a VWAP, I can imagine some people like to use the VWAP. So if price is passing the VWAP, it's a sign of weakness. You name it. A volume profile. Let's see if we pull a volume profile here. Value area high. Right, so if you would move out of the value area high, and then get back in, retest, and then a move down, you're going to be looking for the point of control. So there's many signs of weakness, but it depends on the tools you like to use, which then results into probably your trading plan as well. Maybe BlackRock is Satoshi. Well, we'll probably never know. Some logs into that Genesis account, I think price would take a nosedive. Someone, yeah, probably. Discount for everyone. Elliott waves should be taught as soon as you can walk. I like that. Primary school, or not even like when you go to like the baby schools. Yeah. I don't know, like if I have a kid, of course, like if you're a parent, what you do is like, and how you behave is the single most like important influence on your kid. No, the way you act, like the way you are. But a kid can have completely different interests. So you can, I can try to make him a trader, but if he just doesn't like trading, I like something else, then I'll just support him in the something else, Welcome, Legionario. Welcome. Pleasure, slow end. 3-minute bullish CVD might go higher to the daily naked point of control. Yeah, it's an interesting level. If you do pass the daily naked point of control, there's not much that... I have everything turned on now, but there's not much above the daily naked point of control, as you can see. Let's go to the 4-hour. Okay, value area high. Where is the daily one? Thank you. Okay, so we do have some more. That would be your max, really. But I prefer local levels over the these levels here. So the daily naked point of control would be a nice area. So the 05 is still in confluence with the resistance here. So it is an interesting area. 63K to 63.2K, 1K. At least something going on. We can make it a little box just to make sure we have it on the chart. There we go. I'll just leave it here. Turn this off. Make sure the chart is nice and clean. There we go. When was the first meeting at the CIA? Well, I don't know. 29, 10, yeah. I have no idea. I don't know much about that stuff. What is the best book to learn Elliott waves? That would be Elliott Wave Principle by Frost and Prechter. There's a link in the description. It's an affiliate link, but don't worry, it actually doesn't work. Not kidding. I can't seem to make it work, and I just gave up. So all the links, all the books. If you want to support the channel, I appreciate it, but it won't happen through Amazon. I don't know. Somehow I can't get it to work. But it's called Elliott Wave Principle by Frost and Prechter, and make sure you get the newest edition. And that would be the best book. It gives you a great fundamental, like a great base. Like you learn the fundamentals of Elliott waves, and of course the different wave structures are covered. Not in as much detail as you would see in my beginner playlist here on YouTube, but it gives you a great understanding of how it works, why it works, the different structures. Not in too much detail, so it's easier to grasp, I suppose, in a way. But it's a great book, and if you like Elliott waves, then I think it's a must. It's a nice to have, you know. Yeah, my teacher asked some doubts. What do you mean, BBL? Your teacher asked some doubts. Maybe some questions. Yo, BBL, you can be the teacher of the class, yo. Sam, we have a daily gap above us. Yes, a little one here, actually in confluence with the daily naked point of control as well. Not bad. It's quite nice. I have mentioned your channel. Oh, hello, teacher of BBL. Hopefully your lessons are going well. And if you have any questions about Elliott waves for your class, hit me up. I'll answer your questions so you can teach the class. Barbie, welcome. I think we tagged the fair value gap around 63.3 eventually before. Yeah, so that's the same gap, I suppose, that Sam was talking about, no? Do you use order book heat maps on Trading Light? So to answer the first question, that would be no. I really keep things as simple as possible, and I used order flow a little bit back in the day. Never really got into it, and it just made things more complex than was necessary for my way of trading. So I removed it from the tools that I like to use. So the answer would be no, but it seems like most of your additional tools are order flow data, so it would be interesting to know why you don't use order book or heat map. Yeah, just because of the complexity. So I like to use volume levels. I like to use CVD, which of course is also order flow related. But I don't like to read the order flow as like an additional tool, just due to the complexity, and I really want something that's very simple, and that is exactly what I have. I prefer less tools, and of course I want good data, right? Win rate and all that stuff, but I have it, so I prefer less is more in that case. And yeah, I never got into order flow. Like, yeah, as mentioned, I used it for a while, but it didn't like benefit me much. And that's the thing as well, is you can add lots of different tools to a strategy, but if you figure out that it's not having a significant improvement on your trading, it's probably better to just let it go and do not use it. Because you can keep adding stuff and adding stuff and adding stuff, and before you know it, you check like 10 different things, and you're like, holy shit, man, I don't even know what a setup is anymore, because it becomes so complex. But of course, many use order flow, but I don't. What I do like with order flow is I like the detail, and I love detail. So I do like it as a tool. I love the insight. I love the detail. I love the accuracy. I love the data. It's just that using it for trading decisions made my trading more complex than it needed to be, and it didn't improve my results significant enough, or not at all. I don't remember my data back in the day, but it's not been worth it for me to use that as an additional tool and check it in a checklist before entering a position. So it's better for me to remove the tool, keep it more simple, and yeah. I have Atomic Habits on the desk because of you. Oh, there you go. I'm at page, one second. Chapter 16, which is page 195. I asked in Diamond, so Snake Eyes in Diamond, he's reading a couple of books, and I love reading, and so we were talking about it. I said, like, yo, how do you make time for reading? Because I love reading, but there's so much happening now also because of YouTube. We moved to France, and then you have all the admin stuff, and I find it a bit difficult sometimes to free myself and just read a book. And I actually really like reading. So I have Atomic Habits on my desk here. I also have Confessions of the Pricing Man, How Price Affects Everything, from Herman Simon, on my desk here. I haven't started that one yet, but I really enjoy reading. You know, I love gaining knowledge and learning stuff and then try to implement it. I just struggle to really make time. I mean, in the end, it's all about what is your priority. Do you make time? Yeah, you can always read for a few minutes before going to bed. But I would easily like to take 30 minutes a day, 1 hour a day, and just read. And I say it, and it's like, well, what's 30 minutes? But then I see the list of projects and things that are going on, and I'm like, ooh. So, if there's any people here with a hectic job or entrepreneurs with a hectic agenda, and you learned how to how to combine that, hit me up. I'm ready to listen to you. I'm reading a book named Vijay Mallya's Story. I'm unfamiliar with. Is this a biography? Will it take? Will it take out the yesterday low today? We don't know. Those type of questions like, will we go to 56? Will we take out this XYZ today? Will this happen? I can't answer it because I don't have a glass ball in that respect. We only have Elliott wave probabilities, but from a time perspective, it's impossible for me to answer questions like these. So from an Elliott wave perspective, taking out that low would definitely lead to a nicer structure on the 1 hour. So 100%. But today, tomorrow, next week, first price now is moving up, and we need to see a sign of weakness. And at the moment, we don't. So step by step. When did you have an aha moment with Elliott waves, and what was it? Yeah, so for me to get to this level of Elliott waves took about roughly 1.5 to 2 years of daily studying, except for 2 months in those 2 years, because I was so annoyed with Elliott waves, I quit for 2 months. But my aha moment, well, actually in my journey there were a few. So one big aha moment for me was understanding WXYs, because back in the day I labeled and that was before YouTube. I labeled every correction an ABC, unrelated to what it was in subwaves. I just labeled everything ABC. I was like, why do we even have a WXY? I don't know. I just label everything ABCs, right? And then the moment I understood the difference between ABC and WXY, that was an aha, because I never labeled everything ABC again. Another big aha moment is that for a flat, you need a minimum of the 0.9. Right, so it's just little tricks that are like, aha, right? So if you look for a flat structure, okay, if price doesn't hit the 0.9, I'm not even considering a flat, right? So it's like those like little tricks that then lead to an improvement in your analysis. If a wave 4 hits a 618, aha, okay, that's very, very rare. So okay, it's something I have to remember. If an 886 is touched, it's also an aha, right? Like, oh damn, it's rare for 2. But these are things that I learned in my journey. Like those are more based on understanding the theory very well and knowing the different scenarios by heart. And then you see like, the 886 and the 618 and how they affect probabilities, which leads to little aha moments. But the WXY was a big one because I labeled everything ABC. I didn't get why there was a WXY. Anything else? Not really, yeah. Any particular? No, like, so in the beginning, when I got in touch with Elliott waves because of Berabit, he's in the group as well. When I saw a scenario and it played out, I was like, yo, this shit is interesting. And then I, of course, started to learn it myself. And once on Twitter, I don't know if I am logged into my... I need my other account. 1 second here. What's the other one? This one? Let's hope I can log in. I always suck with passwords. Oh, there we go. Yeah. Okay, so this is my, quote unquote old. It's not 1 second here. Let me move this out. Let me move this in. So let's have a look. This is my, I suppose, older profile. So I'm a global keynote speaker. Not everyone knows, but I speak for C-level executives, mostly across the world. And this was in Czech or Croatia. Czech, lol. Croatia, Šibenik. Was nice, but I'm not too active. But if we go down, it's a lot of speaking related. For the gamers, I know ESL very well because of my career. This jacket, by the way. Yeah, got it here. Anyway, what I'm trying to look for is a scenario. No, this was not the one. I once uploaded an Elliott wave scenario, which I did at quite early in my journey, and it played out to the T. And that's when I was really surprised. Trackmania stuff. I'm scrolling through my whole timeline here. Oh yeah. Here, XRP, 31st of May, 2021. Now that was a little aha. Okay, wait, let me open a new tab. Yeah, so okay, found it. So I analyzed XRP, very old. This is like Kun of 3 years ago, right? Over 3 years. So 2021, you can see picture made 2021, May 7. I started with Elliott waves in February 2021. So I was in it for a few months. And I actually used a WXY here. Impressive for me. and then another one and whatnot. But my understanding of the ABCs and the WXYs was very poor. But basically, and that can also be seen because I like, yeah, whatever. You can see here, probably you'll spot it, 3-wave structure, X, and then I have an internal WXY in a wave Y, which isn't even allowed, by the way. You can't have a WXY inside Y of 2. So that's an interesting one, no? And then over here, I labeled this WY. I mean, I have no idea what the fuck is going on. But here you have price moving down, price moving up, price moving down. I never changed any of these things. And you can't have a WXY in a wave Y, but somehow it worked out nicely. So at that moment in time, I was pretty proud of myself and was like, oh shit, you know, this shit is actually really cool. Now this didn't happen though. We didn't go, but hey, at least you know, that was nice. So that was a little aha moment, as in like, yo, I think like if I can get this to work, I can get really good in this. I just need to learn it a lot more. Yeah, took me about 1.5 years after that picture, 1 year to 1.5 years after that picture to get to where I am today. But yeah, those are like the aha moments when you learn certain tricks. When you do a count on the chart and it plays out, and even though I made mistakes, it still gives you this kick of motivation to continue learning. Yeah. Would you share your count on the latest range? How you approach to count this range here? For me at the moment, it's too like I stick around on the 1 hour. I'm not really interested in going to low time frames here. It's too messy for me. So yeah, like when we talk about the process of counting this, right? You gotta basically look for an impulse, and if you cannot count a good impulse, then it's corrective. So if you want to count an impulse to the upside here, low is in, right? So that's the biggest question, right? Is the low in, yes or no? Well, you take out the low. And can you count an impulse to the upside here? Now, an impulse is either a 1, 2, 3, 4, 5, no overlap allowed between a wave 1 and a wave 4. You need a diagonal, or you need a multi 1, 2, 1, 2, 1, 2, and then boom, a big wave 3, right? And that would be my approach. So yeah, I deep dive into the local price action, and then I'd be like, okay, can I count an impulse? No. Okay. Can I count a diagonal? Maybe. Okay. And then can I count a multi 1, 2? Yeah. And that's how I would approach it on the lower time frame. But yeah, I'm more of a fan of sticking around on the 1 hour at the moment. We can have a look though. Impulse. Well, if this is a 1, 2, 3, 4, 5, that of course doesn't work unless we want to count this as a diagonal. But then this has to be a 1. This has to be a 2. Which means your wave 2 is very, very short compared to your wave 1 though. Yeah, didn't even touch the 382, which is very rare for a wave 2. Right, so that's not something that is really preferred. Also, is wave 3 longer, by the way? So wave 2, wave 4 can only be zigzags. They cannot be anything else. Wave 3 is longer than wave 1, which is also not preferred, by the way. So, okay, diagonal here with this 2, no, it's low probabilities. Then we have other impulsive structures. Well, we need a 1 here. So, okay, 1, 2, 1, 2, 1, 2, 1, 2, 1, 1. Yeah, it starts to be a bit like, where is our big wave 3 before the weekend? Because if you're in a multi 1, 2, you definitely want to see a big ass wave 3 before the weekend, no? And then you need another like, because you have overlap all the time, right? And a wave 2 and a wave 4 are not allowed to overlap. So this is then your 1, 2, 1, 2 because of overlap. 1, 2, overlap. 1, 2, overlap. 1, 2, overlap. Like, yo, if this is going to be like a multi 1, 2, price better get moving soon, and this resistance should be absolutely peanuts, no? Now, having this many 1, 2s as well lowers the probabilities, right? In a multi 1, 2, you preferably see a few, like 2 or 3 in different time frames, but you know, it doesn't look like a great structure at the moment. And also, if you do change market structure, it becomes a bit tricky. So then, okay, an impulse here as a single 1, 2, and then 3, 4, 5 also doesn't work because 3 has all this overlap. So then we need a bigger diagonal. And a bigger diagonal, we then need a 1, 2, 3, 4. We took the low here. Did we take that low before or after taking the high? Low time frame. We first took the high and then we took the low. Okay. So if this would be a diagonal, how can we make this a 1, 2, 3, 4, 5? As mentioned, doesn't work. 3 is also longer. 1, 2, 3, 4, 5. Is there something in here? 3 is at least shorter, but then 4 does not overlap with 1, right? You want wave 1 and wave 4 to overlap in a diagonal, which is not the case here. Nope. Also didn't overlap. I was thinking about maybe like 1, 2, 3, 4, and then if that is 5, then whatever. It's not like it's incredibly messy, this move up. So you know, higher probabilities for it to be corrective until proven otherwise. Really, we can't count a nice impulse here. We can't count a great multi 1, 2 here unless we still get a bigger 3. So give me a big 3 and I'm happy to look into multi 1, 2s. But then a multi 1, 2 would be like this being a wave 2 is so shallow, didn't hit the 382, low probabilities to count diagonal 1, 2, and then somehow another 1, 2, 1, 2, you know what I mean? And counting 5 1, 2s here is really awkward. The weekend is around the corner, so yeah, you know, if you pump, then let it be before the weekend. If you're still ranging here, right, and it's Saturday and you're still here, that's not, of course, not what you want to see in a multi 1, 2, because 2 days of ranging does not support a multi 1, 2. And then you have like diagonal shenanigans, but yeah, no overlap. Messy. So yeah, impulsive structure is not looking too great locally, but we're moving up. I just wait for signs of weakness, signs of resistance, and the probabilities haven't changed. So yeah. Henning, best one, yo, cheers man, you're still here. Best one is Psycho-Cybernetics by Maxwell Maltz. It's even better than Atomic Habits, but way more complex and deep. I'm gonna write that one down. Okay. But I have a list of books in my phone. It's so long. There's like I have years of books. Psycho-Cybernetics. Psycho. Maxwell Maltz. Okay, there we go. It's in my list now. So I guess this one also has to do with habits. It's better than Atomic Habits, way more complex and deep. More into cyber. Interesting. So probably about habits then as well. Interesting. Thanks, Henning. I'm going to make sure to check it out, especially as I'm reading Atomic Habits as well. So it might be interesting as like a follow-up, like a second book after Atomic Habits. Yeah, would be nice. By the way, Henning, I'll message you today. So I got to basically go now, by the way, guys. It's 4. I actually wanted to stream till 4 p.m. Here we are, 10 past 4. But so I have to go somewhere. I'll be back like probably between 5 and 6. What's my agenda? Yeah, probably back between 5 and 6, and I'll message you tonight, Henning. So you can, my messages are coming. It has really benefited my trading alongside you anyways, spot prep walls in my data so far. It's really improved my entries and TPs. I understand your point on keeping it simple. Yeah, everyone has, of course, a different strategy. I also, like, there's many people that love order flow. They love tick charts and use CVD maybe on the ticks, right? Snipe entries. But I always say, like, a trading strategy is a reflection of your personality. Everyone, of course, different personality, different tools, different strategy. Do you see a scenario where we go up and we fall due to an event like war? No, because so I am not a fundamental analyst. Doesn't mean it doesn't work, but I'm not the guy that goes into fundamentals. It's not part of my trading. I respect everyone's way of trading, and some people will be able to trade fundamental events, but not me. So I am fully technical, 100% technical trader, and my scenarios of up or down are purely based on Elliott waves, and generally they precede the news. So before the rockets were flying, I think yesterday or a few days ago, I don't know, we were already looking for a move down, and the probabilities were already higher to move down. And then later in the week, there's the news, and then prices going down because of the news. And I'm like, okay, everyone for his or herself, I suppose. So, no. Do you know owner of Kingfisher brand? Oh no, I actually don't. But interesting. So a biography. Ooh. I am in that stage. What is the difference between ABC and WXY? Ben. Okay, let me quickly get this one. Okay, guys. Okay. Elliott wave lesson. Right? ABC. Wait, let me quickly put it on the chart. Okay. 1 second, I will be drawing. Oh, one second. Oh, that's actually wrong. Let me actually do a nice one. I go too fast. Most commonly this, and then we have that, and that. Okay, there you go. And now we have D, and then we do, and then do, ta-da. Okay, so I want to make this white. Okay, so an ABC corrective structure is either a 5-3-5 or a 3-3-5. A WXY is a 3-3-3. Now there's more to this, so give me a second, right? So an A, B, C, if you use it on a chart, you always look for either a zigzag or a flat, right? A WXY is a 333. Now, inside wave W, you can have a zigzag or you can have a flat. So a flat or a zigzag is a sub-degree, right? Is inside your wave W, and then you still get another XY. Might be going too quick now, but let me stick with the basics. So ABC is either a zigzag or a flat. How do you know? Like, what you gotta be looking for is wave A an impulse, 1, 2, 3, 4, 5, or a 3-wave structure. In other words, is your move of the low 5 waves or 3 waves? Time will tell, no? Once you get a retracement. If the move to the upside is 5 waves, you are going to label this 5-wave move up as a wave A. In this example, to make it a bit more complex, in theory, this can of course also be a wave 1 or a wave C, but that is around, that's too deep. So you label it a wave A. If the move up is a 3-wave structure, you are going to label this move up as a wave A or a wave W. Because in both cases, you look for a 3-wave structure. But wave W can only be a zigzag or a flat. Right? So if you have a 3-wave structure, right? So we made a low, and imagine you have a 3-wave structure here that by itself is a WXY. This again might be a bit complex. WXY. A WXY cannot exist inside W or Y. So if you have a low and you get a WXY, it can be part of a wave A of then an A, B, C flat, right? You can label a WXY as A because it's a 3-wave structure, but you can't put it in a W. Anyway, wave A, 3-wave structure. So in practice, in reality, if we have the chart, what happens? Price makes a low. If we move up in 3 waves, like a zigzag, you will always see me write an A or a W. And then here's the trick. The only Fibonacci you now need on your chart is the 0.9. Where is it? There you go. Because if this is a wave A, then you always look for a flat. Because a 3-wave structure to the upside, if confirmed, is always an A or a W in this example, right? Of course, of course, a 3-wave structure can be the end of the correction and you just continue down, right? Whatever. But in the example here, 3-wave up, always an A or a W. Or, now if it's an A, price needs to go down to the 0.9 Fibonacci. Why? Because for a flat, the minimum target of B is the 0.9. So a wave B is of course a 3-wave structure. Most commonly, wave B is a zigzag family structure, like a simple zigzag. So if the first leg down is quite significant, right? Then think about, hey, we might go for the 0.9. And once hit, if you hit the 0.9, right, be aware of the potential of a flat here. Especially if you take out this low, probabilities are higher for a flat than a WXY, by the way. Now, if the first move down here is not a zigzag family structure. Like imagine this is not a 5-wave structure, 1, 2, 3, 4, 5, or then a 5, 3, 5 ABC, right? Imagine this is not an impulse, but this is a 3-wave, and then you do this, and then you do this, right? We took this high. You see a flat now. Immediately lowers the probabilities for the bigger flat, for price to move down to the 0.9. Why? Because a flat inside wave B of a bigger flat is extremely rare. So if your first move down is not a 5-wave structure, think WXY. If your first move down is not like going down quickly and far enough, think WXY. If the first move down is a 5-waver, there's still the potential for both. If the first move down here, right, is deep, and this is a 5-wave structure, think about a flat, right? So of course there's like, this is very detailed in a way, but you get the idea, no? I suppose. So ABC is a zigzag or a flat. WXY is in W a zigzag or a flat. X can be anything, most commonly a zigzag. And wave Y can be a zigzag, flat, or a triangle. However, if wave W is a zigzag, like I did here, wave Y cannot be a zigzag in a sideways double combo, a sideways WXY. Make it more complex. It can be in a sharp WXY. W, small x, and then a y, right? 3, correction, 3. W, x, y. But this is a double zigzag. So, just to summarize this, don't know if I went too far here, but an ABC is always a zigzag or a flat. If your move of the low, in this example of the low, is a 5-wave structure, zigzag. If it is a 3-wave structure, flat or WXY, depending on the second move to the downside. If that second move down is a 5-wave impulsive structure, there's the potential for B and X. If the move down is a 3-wave structure, right, that is not deep, think, God damn it, I'm making it too complex for myself now. If the first move down is a 5-wave structure here, right, an impulse, 1, 2, 3, 4, 5, and it's quite deep, think flat, because then think zigzag, no? 5, 3, 5. If the first structure down is a flat and you take out this high, it may look like a 5-waver, but it's not. WXY. Yeah, anyway, that's too complex, man, Koen. What the fuck? I already explained it. 5 waves, zigzag, 3 waves of the low, A or W, and then just look at the move down, and then you'll know. And for a flat, you need at least the 0.9 to be hit. If you do not hit the 0.9 and the first move up is a 3-waver and the move down is a 3-waver, WXY. Man, you know what we need to do? We need to make a decision tree. That is what we need to do. I need to make... Jeroen, put it in the plan. Put it in the plan. We need to make a decision tree. So that people can just follow the decision tree, and then that. That's what we're gonna do. We're gonna make a decision tree. It won't be tomorrow, but we're gonna make one. So that it makes it easier for people, I suppose. Yeah. Okay, water finished, I'm finished. Quick skim. I say that all the time already. But do you check grayscale trusts? No. Pain. Yeah, diagonals are generally a pain for the brain. This move up here locally, at low probabilities, this is an impulse as a 5-wave structure. You either need to look for a multi-1-2 or a diagonal, but none of those look great. So it looks better as a corrective structure as long as we don't see an impulsive wave 3. Also, if you're still here during the weekend, then yeah, not good for the bulls. Extended flat, that's an option, correct. Broke the uptrend line. You mean the downtrend trend line? Or the local uptrend? In both cases, I guess you might be correct there, yeah. Compound effect, Darren Hardy. Yo, guys, you guys, like, you're throwing great sources of information here. Compound effect. Darren Hardy. Yeah, I have so many books in here. Gary Vaynerchuk, Crushing It, Compound Effect, Psycho-Cybernetics, Trend-Serving 78, Mastery, Robert Greene, 10x is easier than 2x, Dan Sullivan, The Miracle Morning, Hal Elrod, Carol Dweck, I don't have the title of the book though, Diary of a CEO, Fooled by Randomness, Breaking the Habit of Being Yourself, The Hour Between the Dog and the Wolf, Think and Grow Rich. I don't know, I never really, it's in my list, but I never really had the motivation to get it. This is a Dutch one. As a Man Thinketh by James Allen, The Science of Getting Rich, Wallace D. Waddles, The Expectation Effect, The Chimp Paradox, Complete Turtle Trader, Market Mind Games, The Alchemist, The Man Who Solved the Market, Shoe Dog, The Third Door, The Simple Path to Wealth, One Up on Wall Street, Mastering the Market Cycle, You Can Be a Stock Market Genius, Common Sense Investing, Are You Wired for Wealth, Peak, Secrets from the New Science of Expertise, Make It Stick, The Science of Successful Learning, 177 Mental Toughness Secrets of the World Class, Awaken the Giant Within, Atomic Habits, which is on my table, The Surrender Experiment, My Journey into Life's Perfection, Bigger Pockets, books about real estate. Oh yeah, so like real estate books. How to Calm Your Mind, Meditations, The Psychology of Money. Already read it, but it's still in my list here. Let me get this out because I already have it. I try to update it as good as I can, but you know. So just by mentioning all the books, maybe some of you are like, yo, I'm going to check that one out. Where were we? Meditations, Marcus Aurelius, One Good Trade, Beat the Dealer, How to Make Friends and Influence People, The Silva Mind Control Method, Rhonda Byrne, Secret the Power, The Power and the Magic, First Things First by Covey, 12 Rules of Life, USA Life, Guide to Balance, The Slight Edge, The Richest Man in Babylon, Failing Forward, Trading Wisdom, 50 Trading Lessons Every Trader Must Know, Michael Lewis, The Big Short, also a movie. We watched the movie. Mathematical Basis of Wave Theory, A Complete Guide to Volume Price Analysis. Read the book, then read the market. Red Dalio Principles, How I Made $2 Million in the Stock Market. Depressive Illness, The Curse of the Strong. Common Stocks and Uncommon Profits. The One Thing, Gary Keller. Super Timing, Beckman. The Power of Full Engagement. Stress Without Distress, Geeks and Geezers, How Era, Values, and Defining Moments Shape Leaders, Jim Collins, Good to Great and Build to Last, The Compound Effect. God damn. It's already in my list. Okay. Rich Habits, Rich Life, How I Built This, Wisdom from the Top, Getting to Yes, The 80-20 Principle, Unreasonable Success and How to Achieve It, The Natural Laws of Business, From Mediocrity to Millions, Rich Dad, Poor Dad. Didn't we already mention that one earlier? I think so. Never mind. The Business Book, I have that one. Spin Selling, Pitch Anything, Oversubscribed, Nudge, 10 Reasons to Delete Your Social Media Right Now. Don't do that. Don't do that. Stay here. Yeah, I'm sharing a lot of books. Nice. Traction, how any startup can achieve explosive customer growth. 4-hour work week, shut up and listen. Poor Charlie's Almanac. High performance habits, hooked. 59 seconds. John Maxwell books on leadership. Contagious by Jonna Berger about social currency and marketing. The richest man in the world. Oh, there's definitely a couple of doubles in here. Money Master the Game. Predictable revenue. Oversubscribed. Speed of Trust. The Hook Framework. Disconnected by Thomas Kersting. Power of Habit. And there you go. So, that's throwing with my phone. Those are all the books that I have in my book list at the moment, and some of them are like doubles, but maybe there's something in there for you. Clip Lowry, welcome. My comments get filtered. Welcome, Martin. So of course, besides my band list, maybe YouTube does some stuff, but I also, so this is top chat. You also have a live chat. So here, top chat is also checked by YouTube. Some messages, potential spam may not be visible. So I don't know, maybe they thought like you might be scammy, but we know it's not the case. Okay. Have a good weekend, Carl. Do you see weakness? I'm debating getting out of my long. Yeah, I mean, this move up, of course, counts better as a corrective structure than an impulse, as we done earlier. But I'm already well managed, so I have no issue at all with a move down. So the weakness. I mean, of course, I'm not actively involved with the chart now. Yeah, bear bullish CVDs invalidated. Not really any bigger bearish CVDs here. But from an Elliott wave point of view, when we counted this move during the stream earlier, shortly, right? Probabilities are higher, it's corrective, just because we can't count an impulse, can't count a nice diagonal, and can't count a solid multi-1-2. And then corrective structures take over till proven otherwise. You can also have an... yes, you can, in a wave Y. Decision tree is an excellent idea. Yo, is Jeroen still here? I'm gonna write this guy. Wait. Yo. During the stream, he's Dutch, but I'm gonna write him in English. During the stream, I thought of creating a decision tree from an Elliott wave point of view. Would be great if we put that in the planning. For after the Elliott wave PDF, at least. Okay, there we go. A Google Sheet and built an interface later. DAO like goes always like next level. Yo, Joel, welcome. The VOD will be online. I need to have one clone of myself who would be constantly just reading books. Exactly. Like books are great. Like look, the books I've already read and recommend are in the description. My favorite book is Unscripted by MJ DeMarco. Great business book. Can recommend. Yeah, it's my favorite business book. Period. And then a great, like, of course, Elliott wave principle, if you like Elliott waves. Psychology of money is pretty interesting as well. what's the other one? Essentialism. That one is also really good. Essentialism. Can recommend. Really good book about focus. Doing one thing. Like at the beginning of the stream, nice way to end it as well. At the beginning of the stream, someone was saying the story about the turtle and the rabbit. He saw a video online recently, and I saw the same. I think it was Tim. Consistency outperformed the rabbit. The turtle was first. Funny enough, in that video. And essentialism is all about focus, about doing one thing and putting all your efforts there. And of course, there's periods where you have to divert, or but it's about focus, which is very, very good book. Make sure also, Ted Lee, that you always have an invalidation, a take profit, and a plan, of course, for entering. Pleasure, Versin. Please, if this is a wave 3 now, where can the wave 4 get to? Wave 4 upwards. Uh, 63.7 is the invalidation of a wave 4. So, yeah. Okay, people. Gotta go. Thanks for hanging out. Thanks for being here. So this is Friday. The weekend is always completely random with content. Very unlikely I'll be able to upload something tomorrow because my wife and I are going to do a Spartan race here in Cannes, which is an obstacle run, which is going to be great fun. I always call it like playing outside for adults. Yeah, it's always fun. If you haven't done an obstacle run, check it out. Just start with a low distance and go up. I've done one last year of 42 kilometers with over 100 obstacles. Cannot recommend. It was a great challenge. It was a great challenge, but oh boy, my knee, man. Yeah. So, but I'm getting my wife into it now. So we start with, tomorrow we do 5 kilometers, and that's going to be the first one for her, because she never experienced it and she wants to start slow. She can run, she can do easy 10K running, 15K running, but she never done an obstacle run. So, yeah. We'll see how that goes, and then we start with the 5, and we want to do another one later, and then pick it up by 10, and take it from there. So it's going to be good fun. But thanks everyone. Thanks for being here. Appreciate you guys hanging out. Tonight will be probably a normal update. See where price is, if anything changed, and then I might, of course, upload a video tonight. Usually I do. Before the weekend as well. So let's see if we get any more information. Trade safe, right? We had some news earlier, and generally the weekend is a ranging structure. So let's see where we are when we jump into the weekend. No? So thanks everyone for being here, hanging out, and I'm gonna see you next time.